Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Welcome to this episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney, and as always, it's good to be with you today. Today, we're going to talk about two riders that come with term life policies, the terminal illness rider and the conversion extension rider, and answer the question of, are these important? The bottom line answer is yes, they're important. I work with thousands of physicians helping them secure their private specialty disability coverage. And I end up helping most of our clients with life insurance just because the medical screening and the process and the underwriting and all that is so similar. And for our clients that get term life policies, these two riders are typically included in their policies. And I want to read what they mean and then just offer a brief synopsis of that or summary of that as to why it's important. For a term life policy to have a terminal illness rider, it means that you can accelerate a portion of your death benefit up to 90% of the death benefit. There's usually a cap. It's like 1.5 million, whichever's less, the 90% or the 1.5 million, for a terminal illness prior to death. Terminal illness assumes your life expectancy is 12 months or less. The accelerated benefits may be taxable, depends on the situation, and there's no additional charge to the term life policy for this rider unless it's utilized. So it's on the policy at no extra charge. It's kind of a no-brainer to have this added so that you could tap into the death benefit while you're still alive for a terminal illness without having to wait until the death benefit is paid. Could come in handy. You don't have to use it, but it's at least worth including. The second rider is called the conversion extension rider. And this allows the insured to extend the conversion period of their term policy to the end of the level term period or until the policy anniversary nearest their 70th birthday, whichever comes first. So if you have a 10, 20, or 30-year level term policy, what's important, a valuable asset to include in your term life policy is the ability, the freedom to switch or convert to a permanent life insurance policy like a whole life policy or universal life policy or index policy without having to redo any of the medical screening. Okay, so at any point during that term period, you can convert or switch to one of these permanent life policies without having to redo the medical screening. Now, you may buy your term policy and have no inclination or interest in doing that, but plans change and people's health changes. And if you get toward the latter half of the term period and your health has changed and now you're uninsurable, which we've had happen, all of a sudden having the ability to keep life insurance longer can become important. And if you don't have a conversion feature on your term policy, which most of the chop shop kind of bottom feeder, the cheapest of the online quote engines typically do not have that. If you have a quality term life policy that might be, my clients don't pay a lot more, if any more, than they do compared to the least expensive options, especially in the top tier carriers. Emeritus is very competitive in that way from a cost standpoint, which is who we do most of our term policies with. But having the ability to switch to a permanent life policy can be important. This rider does have a fee attached to it. It's usually $5 to $10 a month, depending on the cost of the policy and the amount of the death benefit. But it is a vital feature to have. It's not required to have it. You can remove it if you want to. It's not advisable to remove it. It's just not worth, that money's just going to sit in your checking account anyway, typically. And I'm not saying you want to be nickeled and dimed to death. That's not the point. This is a valuable feature to have. It's an asset, having the ability or the freedom to switch or pivot if your plans change or your life has an unexpected event. and you want to keep coverage longer, and you otherwise will not be able to keep it beyond the 10 years or the 20 years or the 30 years unless you have this conversion feature. It's a valuable asset to keep in your pocket for future use if you want it. Okay. So just food for thought, your decision, of course, a word to the wise, to not be penny wise and dollar not so wise. Let me know what you think. Would be happy to discuss your situation. Feel free to text me at 704-270-2376. Again, 704-270-2376. Thank you as always for your time.
Thanks for listening to the Cover Your Assets podcast, an Odd Conduit media production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.